Hi, my name is Larry Dixon, Senior Automotive Analyst with the NADA Used Car Guide, filling in for Jonathan Banks for the April market update. The three-year-old new vehicle sales recovery continued in March as the month's tally of slightly more than 1.4 million sales was a strong 13% improvement over the prior year. And although the month's seasonally adjusted annual rate fell a bit from February's 15 million unit figure, it still ended up landing at a healthy 14.3 million. Both cars and light trucks experienced year-over-year sales gains of 16.3% and 8.8% respectively. Although car growth outperformed that of trucks, many buyers clearly opted to move into new, more fuel-efficient vehicles within their preferred segment. This is a departure from the more dramatic shifts in demand witnessed in the past when gasoline prices approached $4 per gallon. New sales over the first quarter were up by 13% compared to last year, and the period marked the first time since spring 2008 that the new vehicle sales SAAR exceeded 14 million for 3 consecutive months. Light truck sales were up 7% through the quarter, while car sales were up a more significant 20%. The year's first quarter sales performance has many analysts increasing their full year projections. April's Blue Chip Economic Indicators consensus forecast for total new vehicle sales now stands at 14.5 million units, which is an increase of 700,000 over January's forecast. Some analysts and industry executives are cautioning against being overly optimistic, however, arguing that the unseasonably warm winter and high volumes of fleet sales helped inflate new vehicle growth over the past 3 months. The influence of the rising cost of gasoline was clearly evident in auction at wholesale prices in March, as compact and midsize car prices grew significantly above the seasonal norm, while large pickup and SUV prices underperformed the market in general. At a market level, prices relative to February jumped by an average of nearly $700 or 4.1% for vehicles up to 5 years in age. While this is double the amount of growth normally associated with the month, the year-to-date appreciation of 7.5% is a full percentage point back of last year's pace. The ongoing retraction in supply continues to support prices for the majority of segments. Relative to the first quarter of 2011, overall auction at supply was down by 14.4%, and only the compact and luxury utility segments had supply increase. April's edition of the official used car guide reflects the general strength associated with heightened spring demand and the effects that higher gasoline prices have across various segments. Over 80% of guidebook vehicles experienced either an upward or no adjustment in value relative to March's edition. Mirroring market trends, compact and midsize car values increased the most by an average of 2.9% and 2.2% respectively, while the luxury utility segment experienced the largest decline in value at a mild 1.7%. Looking ahead, NADA's analysts are forecasting that used vehicle prices will be the strongest for the remainder of the year through May before the rate of decline begins to pick up through the summer months. This is a departure from last year when prices held through July as tight new vehicle availability stemming from the natural disasters in Japan led to a spike in demand for used vehicles. NADA is forecasting that prices in June will be nearly 0.5% less than they will be in April, and that prices in July will almost be 1.5% less. While prices for all segments will be stable over the next 2 months, high gasoline prices mean that compact and mid-sized car value appreciation will continue to outpace other segments. From a retail perspective, consumers will find the next 2 months the most advantageous period for the remainder of the year to trade in their used vehicle. The ongoing decline in the used vehicle supply that began in 2009 has made it challenging for new car dealers to consistently stock reliable, well-maintained used vehicles. This means that dealers will be aggressive with trade-in offers for used vehicles that are in high consumer demand. For more information, please see the April edition of Guidelines. Thanks for watching.